So we're here with Richard Carlton, CEO of the CSE, the Canadian Securities Exchange, at the Benzinga Cannabis Capital Conference. You've made a lot of people very happy and a lot of people very rich. I mean, they made themselves rich, but they've traded on your exchange. Tell us a little bit about that.
Well, it seems in some respects like it was a lifetime ago, and other respects like just yesterday. But it's been 5 years now since we listed our first cannabis company. We started obviously with Canadian LPs that were organizing themselves to take advantage of the new medical regulations in Canada, with an expectation that there was going to be liberalization on the adult recreational use side. It took a couple more years before we saw our first US company, and it wasn't really until the middle part of last year when we saw the first of the multi-state operators arrive. And there was a large cohort of those companies that came public on the CSE between August and December last year, and they are now basically our largest issuers, fastest growing companies. They continue to raise a lot of money, been very aggressive in the mergers and acquisitions space, and very, very exciting for the investment community.
That sounds very exciting. So one of the things that a lot of people mention about the CSE and its growing popularity among cannabis companies is that it allows for dual listings, while some other exchanges might not. Can you maybe share some thoughts into why you allow this, or why this is possible on the CSE and why it's not possible on other exchanges?
Well, I can't really talk about the other exchanges or what their policies are, but it's certainly the best possible experience for the issuers, especially the ones that are based in the United States, for example, to have a US dollar secondary market operating in the United States. So given the issues that those companies would have getting listed on NASDAQ or the New York Stock Exchange, at least for the time being, we have a very successful working partnership with the OTC Markets Group that sees those companies get their shares qualified for continuous net settlement on DTCC, which is the U.S. Clearing and Settlement Organization, as well as a quotation on one of the regulated boards operated by the U.S. OTC markets. And what that does is it gives U.S. investors, whether maybe they were officers, directors, employees of the firm and had invested at an early stage, or whether it's general retail or institutional investors, they're able to execute a trade in U.S. dollars in the United States using their discount brokerage account or their normal brokerage process. And with that, the company can build a U.S. shareholding and have, as I say, liquidity for their early stage investors in U.S. dollars in the U.S. There's a substantial amount of cross-border arbitrage, so the U.S. market maker can't actually widen the spread. They can't run away from size, because if they do, the arbitrage trading will absolutely kill them. Those market makers also have positions in our book, so they will lay off net long positions, they will cover short positions, and otherwise layer our book for risk management purposes. So what happens is you wind up in this virtuous liquidity cycle on both sides of the border. We think it's very powerful, and as I say, gives these companies access to the largest pool of equity capital in the world, which is Canada and the US combined.
Being a man who's very much involved in the capital markets when it comes to cannabis, do you have any predictions you'd like to share for the remainder of 2019, things you expect to happen?
The Canadian producers have a significant advantage right now on their valuations. The multiples are roughly double that of the U.S. multi-state operators. And I think that's going to narrow, both as a result of liberalization of the laws in the United States, whether it's passage of the States Act or further clarification from regulatory authorities on the implications of the Farm Bill for the hemp companies and the CBD producers. And I think it's fair to say that the Canadian producers are going to have challenges meeting the sales expectations that are baked into those valuations. The retail market in Canada is very challenging, particularly in Quebec and Ontario for these issuers, and those are the most populous provinces of Canada. So as I say, you see them looking to diversify outside of Canada as much as they can in order to try to meet those lofty sales expectations, but it's going to be very challenging for those companies that are to continue to build retail sales growth and customer following in the Canadian market.
Well, let's hope they can grow into the valuations they've been assigned by the market.
Absolutely.
Richard, thank you so much for being at the event, for taking the time to chat with us, and
Javier, pleasure as always.
Again.
Thank you very much.